Hello, I'm Neil Whelan and welcome to the Wesleyan Podcast. In this episode, brought to you by Wesleyan Financial Services, Carly Millan-Page, one of our B2B Partnership Account Managers, talks to specialist financial advisor Morna Beattie and Anna Coff of EQ Accountants about the new Making Tax Digital for Income Tax rules that come into effect from April 2026. The chat includes discussion on income thresholds, quarterly reporting, key deadlines, and how dentists can turn their compliance into a strategic financial advantage. As usual, this podcast is for information only and doesn't constitute financial advice. But if you do need to talk to someone about your finances, I'll be back at the end to tell you how to get in touch with us. But for now, I'll hand you over to Morna, Anna, and first up, Carly.
Hi, and welcome to our Dentistry podcast. This is the podcast for dental professionals who are navigating the brand new tax landscape of making tax digital. I'm Carly from Wesleyan, and I'm delighted to be joined by Morna, our specialist financial advisor, and Anna from EQ Accountants. Today, we're going to be exploring making tax digital in Scotland and what dentists need to know and how this links to financial planning throughout the tax year. So let's kick off with Anna. Anna, why is it so important for dentists to understand the thresholds now and what happens if they don't prepare for making tax digital?
Okay, so hi Carly. This has actually been in the pipeline for years, but it just kept getting pushed down the road. It looks like COVID times and stuff. But eventually, finally, from this April 2026, all self-employed individuals, including dentists and landlords in Scotland with qualifying income over £50,000 have to comply with making tax digital. That threshold drops to 30,000 from April 27 and 20,000 in April 2028. So, in the next couple of years, everybody's going to be sort of getting brought into it if you're self-employed and if you have rental properties. It's based on the gross income, so you could have 30,000 of income from your dental work and you could have 20,000 of income from your rental properties, and that means that you would fall into making tax digital. So they need to look at their earnings overall for 24-25, and if they're above 50,000 altogether, then they fall into it starting this April.
My goodness, so that's actually a huge change given the amount of self-employed dentists in Scotland who are earning over that threshold. There'll be a lot of people who are impacted by this.
Yeah, I think every single one of my associates will be impacted. Every single one, yeah.
So a huge change. And so Anna, how will quarterly reporting change the way that dentists manage their finances now compared to their old ways of working?
Well, under the old way of working, it would get past the 5th of April, and then over the course of the few months after that, dentists would send in all their stuff for the whole past year. And then we would prepare their tax return, tell them what they were due to pay in tax, and that would be it. But making tax digital requires you to keep your records digitally, and most importantly, you have to do quarterly submissions to HMRC. So yeah, they're going to have to, instead of either sending their stuff once to their accountant, they're going to have to send it 4 times to their accountant over the course of the year. They can obviously do it themselves, but that's the main thing. It's not one submission of information, it's 4 submissions of information, and then like a final sweep up at the end.
And Morna, how do you think that impacts people's ability to monitor their income? And how does that, do you think this is going to have an impact on how people plan financially?
Well, I think as with any change, people are obviously a little bit resistant, and if something's new, they might not necessarily know how to handle it. But I think putting a positive spin on it, this is here, it's going to be here to stay, and it's probably just getting clients into better habits. The fact that they're going to have to keep on top of their income more regularly, and as Anna said, the fact that they'll be submitting it 4 times per year in real time, it's also then going to help avoid any surprises at the end of tax year, and more importantly, budget if possible to keep down tax brackets, because obviously in sunny Scotland we've got the 6 tax brackets. So I think that once clients get into the good habits of doing things quarterly, it's going to help working alongside with our accountants to see if we can do things more regularly to avoid any end of tax year surprises.
Yeah, so huge changes ahead, and more frequent reporting. So Anna, what practical steps should dentists begin to take each quarter to ensure that they're staying compliant and financially as efficient as possible?
Well, the first step for this compliance-wise is that you need to register for Making Tax Digital, and you have to do that by April 2026. So less than 4 months' time, you have to be registered. And then the first submission for 2026-27 will be due by the 7th of August. So first submission is April to June, and it's due about roughly 5 weeks later. And then the next one will be July to September, and that'll be due at the start of November. So yeah, to stay compliant, they'll first of all need to get registered.
So I suppose, Morna, would you agree that this is a really good opportunity to align cash flow with things like, I don't know, perhaps like pension contributions or any equipment purchases?
No, absolutely. And I think that what we've been trying to educate our clients, especially Anna and I over the last few years, is not having that end of tax year panic. Dripping money in regularly is something that we both sort of speak to our clients about quite regularly. The main one being pension contributions. The fact that obviously with the dentists potentially doing a little bit more private, the income tax band's not really changing. It's just trying to get a little bit smarter with how we can help plan for the future. But rather than have that panic before the 5th of April, I think from the cash flow point of view and working with the accountants and the clients, it makes a lot more sense to drip feed that in and then regularly look at it on a quarterly basis. So if there any adjustments does need to be made or any equipment needs to be purchased, then obviously we can help guide the clients about the right timing, which is, I think, moving forward is going to be a great change for them.
Yeah, because normally in the previous years gone by, Morna would be contacting your mutual clients with me and saying, right, do you want to do pension contributions? But they're not collating all their information and giving me it until after the 5th of April, which is too late to do pension contributions. So it's just sort of keeping them ahead of the game, and then they'll have already done like 3/4 of their income analysis by that point. So they'll have a much better idea of where they're at and if they can do pension contributions.
Yeah, absolutely. It's so much better to be ahead of the game rather than chasing your tail. And as you say, Anna, they're going to have the right information to hand because they're going to be on top of it on a more regular basis. Anna, see when it comes to choosing the correct software for Making Tax Digital, what should associates and self-employed dentists, what should they be looking out for in terms of compliance software? Because this is all new to them.
Yeah, I mean, there's a few out there. There's things like Xero, but it's Xero with an X if you want to go and Google it. QuickBooks, Free Agent. These like Xero and QuickBooks come with a monthly subscription. I mean, it's like quite small. You wouldn't have to pay a lot every month because you're not using it to submit VAT returns. You're not using it to do invoicing and purchase ledgers and all that complicated sort of stuff. You're just using it to record income, expenses and do the submissions. So it probably wouldn't be overly expensive every month, but it's still a cost that they don't have at the minute. The other option is you can just sort of keep a spreadsheet or send in your information to your accountant, and we can do it for you on the software that we already have. You can use spreadsheets and then use bridging software, which is like the kind of middleman, which will read the spreadsheet and submit it to HMRC. So there's lots of options, and it's just finding what's suitable for every person, whether they want to do it themselves or whether they want their accountant to do it. But again, if it's your accountant doing, there will be charges involved. So it's just finding out what they're going to be and making sure you're prepared for it all.
Absolutely. That's a really good point, Anna, and sort of making sure that people are prepared as possible for these things. It's just so important so everyone knows where they stand. With that in mind, Morna, I'm just thinking about individuals' financial strategies. How can dentists turn making tax digital compliance into a strategic advantage for their finances?
Well, I think one of the key points that just Anna touched upon is the fact that making sure they have a dental specialist accountant, because obviously this is quite game changing, and albeit they might have to pay a little bit more, but the key is if they don't get these submissions done quarterly, then there's going to be charges and fines on top of that. So if you've got your accountant working with you, then it's going to be saving you money because it's going to be getting done properly. Which again is then going to help optimize any pension contributions that they want to be making. It might be peak months, springtime potentially, might want to make more pension contributions again before the end of the tax year. But the point is, doing this quarterly reporting is going to help plan for capital expenditure, and it's also going to help avoid any pinch points, which potentially could be over the summer months when people are taking longer holidays. So again, we can help work with the clients to make that adjustment, especially with pension contributions, to make sure that the workflow is in relation to what their earnings are at that point in time. So I think it's going to work very well moving forward.
Oh, excellent. And Morna, you touched upon this earlier, and I just want to revert back to the point you made about the difference between Scotland and the rest of the UK. So what sort of unique challenges do Scottish dentists face under making tax digital compared to other regions of the UK?
Well, obviously, just because we have the different tax thresholds, so therefore in Scotland we become high rate taxpayers at an earlier rate than the rest of the UK. Obviously, we had a budget in November, and sadly the tax bands have not been moved. So although potentially looking at taxes, not thinking there's been an increase, the fact that these tax bands haven't moved, unfortunately, just makes the figures a little bit stagnant. So again, depending on where you're working with in the UK, obviously having an accountant will keep you right, trying to keep you below tax bands if possible. But obviously in Scotland, we become a high rate tax earner, but a lot more before the rest of the UK, and also we've got the advanced tax rule as well. So again, depending on what people's life choices are, people might be going on maternity or paternity or taking career breaks. Again, working with the accountants and using this new format moving forward, we can potentially help bring clients below a tax band. But again, it's very much going to be done on an individual basis.
And I suppose, Morna, that depends on if your accountant and your financial advisor are working in synergy rather than in silo, I suppose, to one another.
Yeah, I know 100%, and I think probably Anna and I maybe take each other for granted because we've always had a very good working relationship with our clients. And they're put at the forefront of everything that we do. So again, that is a good point. Again, we probably just get the fact that that's just the way that we work with our clients, and maybe not everyone is the same. But again, if you communicate, have regular open channels, and working with the accountant and the financial advisor and putting the client at the forefront of everything, obviously is going to benefit everyone in the here, the future, and moving forward as well.
Excellent. Thank you so much. And I know we touched upon this earlier, but just to clarify, how can dentists use their pension contributions to manage their tax liabilities throughout the year? And is it only pension contributions that they can use as almost something within their toolkit to manage their tax liability efficiently?
Well, obviously, having that visibility quarterly obviously means that clients can adjust their pension contributions. Also depends on what their NHS income is, depending on what type of practice they've got as well. Again, there's lots of different ways depending if they're an associate or a practice owner, and there's different reliefs that they can use, or potentially they're going to be using big spends to buy some dental expenses, which I'm sure Anna can explain in a little bit more detail. But again, it's just having the whole option of seeing the snapshot on a quarterly basis and then working out what's the right timing of doing what tax advantage contribution and when.
I think the thing to point out is that although this is like oh, why have we got to do this? This is an extra admin task. This sounds like a nightmare. This sounds like it's going to be expensive. But just like forcing yourself to do this, like it's like little chunks. So it's just little 3-month chunks. You're not needing to collate a whole 12-month set of information, which you've had to do, which can be something that you definitely procrastinate on, like, oh, I'll leave that, I'll leave that, I'll leave that, I'll leave that. Still got associates that I'm like chasing to get in their tax information just now. But if it's just little 3-month chunks, then I think, you'll get into the swing of it and you'll be like, right, that, it's less of a daunting task to do. And for the likes of me and Morna, then we are so much more in a better position to be able to advise you like instantly, like, okay, so you need to go and buy some equipment for your practice, right? Well, we've already got 9 months of information, so let's just have a look at that and see, and we know instantly where you are. And same with the pensions, right? We've got 9 months of information already. You don't need to go and collate it. We don't need to wait until we've done the tax return. We don't need to double up on work. So it is a positive thing.
Yeah, absolutely. So it's essentially not just about compliance, it's actually going to create opportunities for people to sort of plan financially in a much more efficient way that's going to lead for potentially better financial outcomes for people.
Yeah, and I probably want to point out, because I didn't mention this before, but you don't have to pay the tax quarterly. You're just doing a submission. It's not that they're wanting the money from you at the minute anyway. They just want you to do the quarterly submission, and then you do like your final sort of tidy up like you would normally do, and then that's when you pay any tax that's due. So like the paying of taxes is not changing, it's just a quarterly submission.
Oh, Anna, so do you think this is going to help people budget better for their tax liabilities potentially?
Well, yeah, because they'll do their first 3 months and they'll be like, right, okay, well, based on that, roughly that's the amount of tax it's going to be due on that. And it's definitely easier for associates. Practice owners, there's a lot more sort of accountancy adjustments that'll get done at the end, stock movements, accruals, prepayments, all that sort of stuff, which will have an impact on what the final figure is. But definitely you'll be more aware of where you're at. And that's when you'll then think, right, okay, that's a big tax bill. Well, I need that new dental chair, so I'm just going to get it before the end of March.
Yeah, and I think it's just going to keep the client into good habits. So rather than have that horrible, especially for the January tax bill, there's not going to be such that horrible element of surprise of, oh my goodness, I didn't expect it to be X amount. Whereas you can drip through the information. So therefore, like you say, you can just help plan a lot better. So hopefully there's not going to be those really horrible January blues for dentists.
And I think another thing I want to point out is this: it's just self-employed individuals. So that means if you're a limited company, then you don't fall into this. If you're doing a split, like NHS goes into your self-employed, private goes into your company, it's only the self-employed part of it that you'd be assessing income-wise. And also, if you run your own practice as a partnership, you don't fall into this either. It's just sole trade and self-employed and landlords, not limited companies and not partnerships.
Ah, okay, Anna. So what happens? Say, for example, you have a limited company and an individual is drawing dividends from the limited company. What element is subject to making tax digital? Is it the whole amount from the limited company? Is it the dividends, or is it just
No,
the
so if
self-assessed income?
I mean, a lot of dentists wouldn't, if they're purely just taking dividends and like a salary from their company and they don't have sort of an NHS bit that they like sort of carve out and put as their self-employed, then they just wouldn't fall into it at all. But
wow, okay.
so if you're a purely private dentist that puts all their income through a limited company, then you're not falling into this. And if you've got, you know, two people running a partnership as a practice and that information goes onto their tax return as partnership income, it doesn't fall into it. So it's just self-employed associates and landlords.
Ah, okay. So do you think, Anna, and this is just purely from like an opinion perspective, do you think this will be a catalyst for making people who've maybe been slightly on the fence about incorporating? Do you think this is going to tip them over?
I mean, it might, but that's a whole new can of worms. You've got to be so careful, like what we spoke about in the last podcast. You've got to be so careful with putting NHS income into a limited company. It shouldn't be done. So you must take advice. But if it's suitable for you, then it could be a catalyst to incorporate. That could be a way of getting out of it just now, but only if that is suitable for your income. Similarly, if you know if you're running a practice, you know, you think about maybe bringing in a partner in some form or another, make it a partnership. That there's obviously costs in the background of that, legal costs to make a partner, but you wouldn't have to do the making tax digital. But I think as we spoke about throughout the podcast, you know, this is a positive thing. It keeps people on top of their finances. So won't go making any structural decisions just to try and stay out of it.
No, I think
Absolutely.
that the only positivity that we should think about as well, that from an admin point of view, is potentially having a bank account that's set up for this. If you've just got one bank account and you've got all your income and all your expenditure going out of the same account, for neatness, it probably is now the right time to have two bank accounts. Again, you can get bank accounts that are linked to, if you go down any of the zeros or anything else that your accountant recommends that you have, there can be bank accounts that are linked to it. But I do think from an admin point of view, again, it's not the worst thing to keep your housekeeping in order and just try and separate, you know, your life of what your income and expenditure is. So again, it's just getting into good habits.
Yeah, I definitely agree with that, Morna, because Xero and QuickBooks have lovely bank feeds. They're amazing and they're so efficient. So it looks at your bank, it pulls all the transactions in, and you're basically doing a sort of quick analysis in Xero, like, okay, yeah, that's my income, that's a course. You know, it's quite quick to actually process it if you've got a separate bank. Whereas if it's your normal bank account with your food shopping and your petrol and your restaurants and whatever else, all your mortgage, things like that, then that's just a mess. So definitely a good time to look at getting a separate bank account.
Fantastic. Honestly, ladies, that was really insightful. I can't thank you enough for spending some time on this today. I really appreciate it. I'm sure that our listeners will all have taken something away from this as we enter the new year in this new sort of terrain in terms of tax planning. So thank you both ever so much, and we look forward to seeing you all again soon.
And that's our show for this week. Thank you to Carly, Anna and Morna. If you are looking for expert financial advice, go to wesleyan.co.uk, where you can book an appointment with one of our specialist financial advisors. Charges may apply, but we won't charge you until you've agreed the services you require and the associated costs. Find out more at wesleyan.co.uk/charges. To learn about Wesleyan more generally, you can find us on the website formerly known as Twitter, as well as over on Facebook, Instagram and LinkedIn. And if you found this podcast useful, you can like and subscribe to us on all the usual platforms, as well as find us on YouTube, where there's a whole library of videos covering a wide range of financial planning topics. But that's it for now. So until next time, thanks for listening.